Good morning, everyone, and welcome to the Conservative Home Marquee sponsored by OVO. My name is Angus Parsad-Wyatt. I'm the Chief Executive of Conservative Home, and it is my pleasure to welcome you all here this morning. Thank you for turning out in your numbers and braving the Manchester rain to get here. And hello to those of you watching on the live stream, hopefully from somewhere warmer and drier than here. Today's session, A British Success, How Financial and Related Professional Services Are Driving Growth and Innovation, is in partnership with TheCityUK. I see many of them here. Thank you very much again for working with us this year. Delighted to be joined today by the Minister, Andrew Griffith, obviously Economic Secretary to the Treasury and City Minister. And I'll introduce the other panellists shortly and give them an opportunity to tell you who they are. The UK is at the forefront of global financial and professional services, and this is thanks to our rich history, our robust infrastructure, and crucially our ability to innovate and keep adapting. Today's panel in partnership with the TheCityUK will delve into the dynamics of this vital industry and explore how the sector not only drives growth and innovation, but provides stability and resilience for our economy. It also employs nearly 2.5 million people, which is a really crucial sector for the country. And this is obviously against the backdrop of us navigating the challenges and opportunities around the world to ensure that we remain a world leader in financial and professional services. So you're not here to hear from me. You are obviously, hopefully, here to hear from these people either side of me. A challenge for myself this morning that we've got two Catherines, different spelling, and a Griffith and a Griffith. So if we get muddled up, just give me a nudge. So firstly, to introduce the chair of the TheCityUK Leadership Council, Bruce Carnegie-Brown. Bruce.
Thank you very much, Angus. Delighted to be here. TheCityUK, as I hope most of you know, represents the financial services industry and related professional services industry to government and indeed to its broader stakeholders, and I think has a really important role to play in batting for financial and professional services. And I think that the title, I hope, is a given in terms of the importance and success of this industry in the UK, but it would be fair to say that I think the industry has spent a fair amount of time on the naughty step since the global financial crisis, and I'm delighted that this government has rediscovered its importance to the UK economy and introduced a lot of very positive changes that should enable us to continue to grow and help drive innovation in this country.
Thanks very much. And Catherine Braddock, Group Head of Strategic Policy at Barclays. Welcome.
Thank you very much. Thank you, Angus. Thank you, TCUK, for hosting us today. I think that this is it's a particularly apposite time for us to be talking about how we get financial and professional services to deliver for the UK economy. The Minister, his predecessor, the Chancellor, his predecessor, the current Prime Minister, have between them delivered a really impressive programme of regulatory reform for financial services in the UK. A very important set of changes that we must see through, that we must continue to focus on. We cannot bank those. We need to continue to make sure they work the way they should, and they will certainly support the competitiveness of the UK economy. But I think we need also to start thinking about changing the paradigm we use for the way this industry engages with government to ensure that we're focusing on the debate we really need to be having. In the wake of the financial crisis, the conversation we had was, has regulation gone too far or not far enough to deal with the problems of that crisis? The question now is, how do we deploy finance most effectively to confront the challenges and opportunities that face the UK economy? And for that, I think we need a new kind of partnership. I think we need to be talking about issues beyond regulation. So, for example, the Prime Minister's reference in his speech on net zero to the grid was more interesting than you might expect to a bank. And that's because if you answer questions about the national grid, you answer questions about investment in infrastructure and reform and improvement of the nation's energy supply that unlock a load of other financing questions for us. So I think finding a new way to have that conversation, a way that the Minister is doing an outstanding job of fostering with us, is really, really important. And I think in particular the work he engages in so closely on capital markets is going to be really critical to ensuring that the capability represented in this room and beyond is really being deployed for the UK. And that's not a philanthropic exercise. Our institutions thrive when our domestic economies thrive.
Thank you. And from Catherine to Catherine Griffith, City Editor of Bloomberg. Good morning.
Good morning. Good morning, everyone, on this wet and rainy day. We at Bloomberg have created a lot of focus on the UK in the last year. We have a UK website. We have lots and lots of interest in what's going on in UK financial markets. It's been a very happy coincidence for us that reforms, the future of the City of London has gone alongside our own development. So we're incredibly interested in everything you have to say, and indeed what those on this panel have to say too. I think there's a certain irony in the fact that we sit here today as a sort of a live situation is playing out in the form of, can the financial sector, can the private sector step up and help Andy Street in his hour of need get that last leg of HS2 done, as he was appealing to them on the steps of the Midland Hotel last night? We'll see. It doesn't seem he's going to be successful, but we'll find out. Nonetheless, I think covering financial services for quite a long time now, there certainly has been a palpable change in the way the government treats financial services. It is indeed several Conservative governments or leaders who have chosen to sort of put them to the side in post-Brexit negotiations. But it is the case, undoubtedly, that Andrew Griffith's team have kind of much more embraced your sector. And we've seen as a result, you know, real progress in the form of legislation that's gone through and consultations that are going on. But of course, we can't ignore the fact that there are big questions that need to be dealt with. How does the UK attract the companies of the future? How does the UK sort of move to this more risk-taking model that we would all quite like to see alongside proper consumer protections? And indeed, what is the future of the UK in the longer term? We've seen sort of relatively encouraging signs on post-Brexit, numbers of people and assets moving to the EU. It hasn't been a bloodbath, but what is that lost opportunity potentially that we might not get now? And indeed, what is the real future of the London stock market if actually all funds go to the place where there's most liquidity, the US? Should in fact the UK be thinking of other ways to carve its mark? Is it about specialism? Is it about private markets? Those are the questions that I wonder about. Thanks.
Thanks, Catherine. And last but certainly not least, Minister, thank you very much for joining us this morning. A few words from you, if you would, please.
Well, Angus, thank you. It's a delight to be here with Conservative Home. And first of all, let me thank so many of you. I think the bars were going very strong when I went to bed last night. So I suspect this audience has got a fair number of people in it who work professionally in the financial services sector. It's a wonderful sector of our economy. So thank you for getting up early this morning, for joining this panel. But most importantly, thank you for the contribution you make to the UK economy. It's 12% of the entire economy that's accounted for by financial and professional services. It's I often say, it's maybe a bit colloquial, but it's the British equivalent of the German auto industry. And just as you would not find a politician in Germany that doesn't love and value and appreciate and champion the auto industry, so too does this government do that for financial services. And we have a great story to tell. I suspect many of you know this, perhaps Angus you don't, but the United Kingdom accounts for 40% of all foreign exchange trading happens here in London. Our insurance sector is the single largest on the whole planet. Insurance and reinsurance done here in the United Kingdom. We have more pension capital than either Australia or Canada. You hear a lot about them, but the actual pool of private pension capital that we have in the UK is larger than that. We have the most international stock market in the world, and only yesterday a report from Innovate Finance revealed that we have overtaken San Francisco in terms of the size of our fintech market, the new dynamic part of the industry that's growing every day. I always try and remind people about the fundamental importance of our financial services and the real alchemy that they perform, whether it's access to credit for a founder, someone taking their side hustle and trying to make a go of it and take risk and speculate, the magic of insurance, the ability to pull risk, to defray things that would potentially in other parts of the world wipe out a family's wealth for a generation, by the magic of pooling, the insurance that started in London after the Great Fire, we can defray that. It's one of the building blocks of modern civilization and prosperity. And of course, the decisions that we make, that you make, affect everybody's life, whether it's your access to get onto the housing ladder, your ability to transfer wealth from that moment in life when you're earning to when you need that later on. And that brings me to my final point, Angus, that exactly as Catherine and Catherine both said, our agenda is fundamental to all of the really big challenges we face as society. All of them, if you think about the industrial policy of the United Kingdom, the growth sectors that the Chancellor and the Prime Minister would talk about, AI, quantum, advanced manufacturing, the life sciences, and above all, that transition to a new low-carbon, clean energy world. All of those require productive capital. And so if you think there's a unifying theme about our ambitious agenda of reform, and we are, I'd say, halfway through that. We kicked that off a year ago. We've got the primary legislation. There's another year now to sort of finish the job and put all of that on the statute book. The unifying theme of that is to make capital more productive in harness of making our economy grow faster and deliver better societal outcomes for everybody who lives in this country. That's our mission. You can tell, Angus, I'm thrilled by that mission. It's incredibly important that we get it right. And this government is very, very focused on it. We've got a Prime Minister and a Chancellor who intrinsically understand these points.
Thank you very much. And I think one of the key themes that came out of all of those opening statements is thinking about where we are at this moment in time. You know, financial services, professional services, it's not new. It's obviously, as I said at the beginning, got that history, particularly in London, but growing across the United Kingdom. And we are obviously in a bit of a period of change generally as we adjust to life outside the EU and what that means for the sector. As Bruce touched on, obviously there's been some political changes over the last few years, hopefully enough for now. And that has obviously brought with it kind of different approaches. And it feels like, and certainly, and I know Andrew believes this wholeheartedly, and I agree with him that this government gets this, and certainly the Prime Minister kind of leading that government certainly does. But I want to, if we can, start with each of you, just going through what you see as the kind of key opportunities now, off the back of the Financial Services and Markets Act, looking at where we are for this sector. What are the growth areas? Where can we go next on this? And we'll come to Bruce first.
Well, I think actually innovation happens in financial services all the time. The key for me is to develop a better risk appetite across our economy. And what's happened for the last 15 years is regulation has been removing risk from the economy and believing that in removing risk from the economy it was protecting citizens. The problem with that is that if you look at our pension fund industry, it doesn't return enough to help people's pensions in retirement, and so government has to come back in at the end to support people who have inadequate pension resources. Our pensions have de-equitized their investment strategies, and so there's no money going into UK PLC to help with the necessary investment in infrastructure. All of these things need to be reversed in order for us to begin to make progress. And if our institutions in the UK and our citizens in the UK are not investing in our stock market, we shouldn't be surprised that the rest of the world doesn't spend as much time as we'd like investing in our stock market. And so we've got to create a virtuous circle out of this. And as I said before, I think the government has done a good job of turning policy into legislation, but there really needs to be a focus on implementation now. And I believe regulation still gets in the way of this. It is extraordinary to me that Andrew can have been working for 12 months on the financial services bill that was passed into law at the end of May, and then the financial regulators in the UK announced a consultation on how they will respond to their new competitiveness mandate. What were they doing for the 12 months in the lead up to this legislation being passed? Andrew is very eloquent on the fact that a year is a long time in politics, and this government has a good chance in the next 12 months to turn around its fortunes in the opinion polls. My concern is that half of that time at least is going to get eaten up by the regulators dragging their feet, and by the time they begin to develop competitiveness strategies for the UK economy, and by the time those are felt by people in the economy, it will be too late. And so we've got to go at pace on this reform in order for it to benefit the economy as quickly as possible.
Thank you. And coming to this Catherine, I should have to find a way to distinguish. But Catherine down the end here, what's your view on this? I mean, you spoke in your opening there around the lost opportunities from Brexit, but there are new opportunities that come with this, right? And the sector remains highly competitive. London remains leading financial centre. What do you see it as the kind of key opportunities?
I wonder if opportunities do lie around points about specialisation and excellence, and I know that there's lots of people in the banking world who might argue, for example, things like digitisation of stocks and shares and equities and bonds is a really key opportunity for London, and that does feel to me like a very productive place to be looking. And I suppose, again, reflecting some views of others, and I think this is a very sensible point, we talk about sort of risk-taking and things, and certainly that makes sense. But I suppose fundamentally it's about things like we in this country, if we're lucky enough, may have a house and we're all obsessed with our house price. And of course, not that many of us have shares either directly, or we don't have a great deal of interest in them in the form of our pensions. And I know the Minister has talked about this, and it does make sense. So I pose a question: how about we have a retail offer of NatWest shares to get everyone excited?
An interesting question to pose. And Catherine, from your perspective, what do you see are the key things?
So in terms of regulation, I think it's as I sort of indicated in my opening remarks, I think it's a mistake to think that we can regulate our way into competitiveness. The regulatory reform we've seen, led by Andrew at the Treasury and his predecessors and some excellent officials, past and present, has been tremendously successful in taking advantage of the fact that we have control over our own regulatory regime. And in particular around capital markets, I think that's a massive asset for the UK. It is much simpler for us to right-size regulation to a competitive capital market in the UK than it is for any of our European Union competitors now. But actually, we've seen a lot of regulatory change over a very long period. Regulation and continuing to tinker with regulation is not going to unlock the problem. I think if you look at the capital markets question, therefore, having addressed the regulatory questions and being, in the process of sorting them out, what we have to look at as an industry is some of the more difficult questions that arise. What is going on the demand side? What can we do around the demand side that will change appetite for risk? That's the situation that we're in is there for a reason, and it's not enough just to blame successive governments and regulators for that. I think for me the question of retail comes into. Therefore, I think it would be a healthy thing for us to use the FCA's review of advice and guidance for us to press on that open door to think about increasing access to the ability to get financial markets to deliver for you as a saver. I think that would be beneficial for savers and probably beneficial for the economy. I think that, there was some discussion in the press recently about ISA reform. I think that would be helpful as well. But the reason those are important is not because they will deliver, retail access to equities is not going to deliver a massive slug of money into the UK's equities market. What it does is help us with a broader problem, which is one of the most pernicious overhangs of the financial crisis, is our entire economy and culture and society now thinks of financial services as a source of risk. Financial services exist to price, distribute, manage risk. That's what we're all doing all the time, but that's not the discussion that we have. And unless we shift the way we think about the value of financial services for the economy, we're not going to, ministers like Andrew are going to have an uphill battle clearing the way for us to make sure that they actually do deliver. So I think if we can start to think about that risk conversation, about talking about it clearly and openly, using the opportunities that we have, we start to shift the culture that exists outside and beyond the public institutions that is also part of the problem.
Thank you. And Andrew, from your perspective, obviously against a backdrop of what has been a turbulent time economically, but also politically, do you think there has been a danger that the government has maybe been seen to play things safe and to set a culture where people feel they need to operate in a more controlled way and not take some of those risks? And what can you be doing to create an environment where people do say, actually, yeah, we'll take a punt on this?
Look, I think we are. I'm heartened. I think we're winning because the fact that all three of my fellow panelists talked about risk. What we're trying to do is slightly reset the pendulum, not at the extremities, not to the extinguishment of all risk, which was a 2008 sort of knee-jerk reaction. Not to take wild risks in the other direction, but just to get that pendulum in the middle. And because it speaks to such large denominators, that a small change in risk-taking appetite that we can foster through both regulation, both through some fiscal nudges, where governments require, but much more importantly on culture, can have a really big impact. And so that I think is one of our biggest opportunities. I don't think it's actually been impacted, by what may or may not go on in SW1. I think actually people do have a latent desire to do that. We see lots of people are taking risk and investing in asset classes that are perhaps less regulated. We see crypto. Quite a lot of people have dabbled with that because human nature is to explore risk. That's why people sailed over the edge of what they thought was a flat Earth to discover new lands. Other opportunities for us over the next 12 months. There's definitely an opportunity to improve the regulator's clock speed. Bruce talked about that. That is a big opportunity, just to do the same things, but do them quicker. And we look particularly at, some of the basics, right? Get the basics right, authorizations, the ability of someone to work in the financial markets. There is an opportunity there to make us all a little bit nimbler and improve our international competitiveness. And again, a couple of my fellow panelists have talked about the opportunity for retail share ownership. I am openly covetous of the relationship that people have in the US. It's not the only market, but if you have a barbecue in the US, they'll talk initially about soccer. Still wrong, it's still called football. But then they'll talk about what's in their 401k or their Roth IRA. There's actually a culture of what stocks people are and aren't investing in. People feel more agency. Our own beneficial ownership in the UK is not that bad, but it's highly, highly disintermediated. No one knows what's in their pension fund. It's abstracted in a way. I say sometimes in jest that the people who are gluing themselves to the streets have no idea what's in their trust fund. Right? They're benefiting probably from all sorts of hydrocarbon shares that they just simply don't know because we've disintermediated the whole process of owning shares. So, yes, it would be nice to have some more retail primary share issuance, but there's a much bigger point about people feeling connected with what's in their underlying portfolio because they are savings. We do have decent amount of pension wealth, but no one has in my experience, no one's got a clue what's actually there or feels that they're particularly vested in it. And that's not good for society. I mean, there's a wider issue about, how do you form attitudes to private ownership of assets. Tony Blair Institute, previously the Legatum Institute, does a tracker of what people feel about, which should be in the private and which should be in the public sector. And for a conservative, for a philosophical conservative, some of those attitudes are properly scary. And I think, again, that if we can reconnect people with the wonderful problem-solving power of private capital, people will feel they've got more of a stake, which is good for us conservatives as well.
So one of the key things that you talk about there, Andrew, is around people and their own view of financial services, their own view of stocks and shares, and people's sort of understanding of these things. And I think you're right that partly through technology and some of that innovation we spoke about at the start, it's made it much easier for people to have a share portfolio that they don't know what it contains, but they're quite happy for it to be managed by someone else. And I guess this builds on something that Catherine G said, which is around that kind of specialisation excellence piece. And it goes to a wider point around how we continue to develop this sector and bring in the right talent and the right skills and the right people to keep this sector growing and to keep it dynamic and to keep it innovating. So Catherine, when you're talking about when you're talking about trying to build that specialisation and trying to build excellence, how can we create the right pipeline to get people to be taking up careers in the first place in the sector, and then obviously fostering that talent to make sure that we are a world leader?
I mean, I think we do quite well on that. I think that we obviously have excellent education in universities. I think we do still have lots and lots of people who come from overseas and really do want to work in the UK and love living in London and in other parts of the UK. So I think we have strong suits there. I suppose, though, clearly Brexit did play a part in some people not wanting to come to the UK, or indeed wanting to perhaps leave the UK if they weren't from here in the first place. So I suppose there's a point there. And I suppose it's about, you know, everyone always says it, but it's about sort of businesses feeling confident in the structure, in sort of clarity and consistency, that also help. And I suppose it is about being brave. If actually we look into the future and we do think that, as you know, as good a job as the London Stock Exchange, for example, is doing in really trying to sort of lobby any promising fintech it can find to list here, actually if the liquidity really is in New York in the future, perhaps it is being brave and thinking, well, that's okay if actually the stock market, the UK stock market, isn't as big as we'd like it to be. Perhaps it's a bit vainglorious to try and sort of return to the past. And so maybe we do need to look at other areas, like, for example, private markets, to sort of measure ourselves in those ways.
Key. Is maths to 18 part of the answer?
I really hope not.
Very good. Bruce, I know the City UK did your recent report enabling growth across the UK. And I think obviously with us being here in Manchester, I think traditionally people, when they think about financial services, professional services, maybe think about the city, the square mile, and possibly Canary Wharf after that. But it's certainly very London-centric in people's minds. How can we ensure that financial services and the entire sector is growing right across the UK and not just in London at others' expense?
Well, I think the statistics already bear it out. It is a truly national industry. You referenced 2.5 million people working in the industry in the United Kingdom. 54,000 of those work in Manchester, and indeed 300,000 of them work in the northwest. By way of example, I think there was, can't remember which Tory minister it was, during the Brexit conversation, celebrated the fact that the first and second largest financial services centres in Europe are in the UK, being London and Edinburgh. And so we start with a lot of advantages in an industry that is very dispersed across the UK, and I don't think that's a challenge. I think it's just about awareness in terms of the opportunity there, and getting in front of MPs and understanding how it impacts their constituents when financial services does well versus when it doesn't. So I'm an optimist on that. And I think the key is talent here, not just homegrown talent, but imported talent from around the world. Because if you have the right talent, then capital and customers will follow. And we have been a huge beneficiary since the mid-1980s of the talent wanting to be here, not just British talent, but international talent wanting to be here. And that's the piece we've become a bit complacent about. As many countries, we've got a little bit more inward-looking and made ourselves less attractive to talent wanting to come here. A good example is the authorizations regime. If you're the global head of a US investment bank and you are appointing a new, hopefully European country head to be based in London, that individual is almost certainly one of the top 10 or 12 people in your organization. You've probably taken quite a lot of time and care about the development of their career and the development of their talent, and you've been quite thoughtful about who you want to occupy that seat. If you then decide to appoint that individual to the role, and the UK regulator then takes 6 months to make a decision on whether they can come, it's really very irritating on the margin, to say the least, and it gets in the way of the fast and effective performance of business. So thinking more outwardly in terms of mutual recognition of qualifications, for instance, is a big opportunity for the UK. If somebody has managed to develop a successful banking career, broking career, legal career, accounting career in the United States, don't we think they're good enough to work in our market? Do we think they have to go through processes again and again? And if the people hiring them over here have got it wrong, The regulators have lots of sanctions. They can put me in jail any day of the week they want to if I have not done due process in the recruitment of the right people, and if the people that I choose to work in my business fail to do a good job and put the firm and potentially the wider economy at risk. So this overload of regulatory obligation is a huge disincentive. The regulators here will tell you that the Americans have plenty of regulations of their own, and of course they do. But if you've grown up in the US market, you understand those regulations, and it's the incremental piece of what more do I have to do when I invest internationally, and how does the UK compare in that relative to investing in France or in Germany or other places I could choose. We could make this a whole lot easier without costing the government a penny. One of my lines to government is you should be looking at things that don't cost you money. Everyone wants money from government, and there are a whole bunch of things that we can do that free up the competitiveness of our economy that actually would cost government nothing at all and would return government many times over in terms of investment in this country.
Thanks, Bruce. And Catherine, just your thoughts briefly on this sort of people and place conversation that we're in now around how we get the right people in the right places, growing this sector and taking those opportunities forward across the whole of the UK.
Yeah, I mean, so, people have talked about the part of this, which is being able to move people internationally, and I'm from an international firm, and that's obviously really important. Financial services is a business fundamentally delivered by people, even if they're people who are doing things that automate some of our process. The bit of it that I'll just say a word about is the regional story for UK financial services, because we do employ a lot of people outside London. There's a part of it which is moving brilliant risk analysts from Paris into London, and long may that continue. But there's a part of it which is also doing really high quality work in financial centres around the nations and regions of the United Kingdom. That's something that is really important. It's something that as a sector we should not do by accident. We should be thoughtful about. I think regional development is a central part of this government's agenda and previous government's agendas. Rebalancing the regional economy of the UK is really important for our economic success. And so continued partnership with higher education institutions, with even local schools, reaching out into our communities so that people understand that financial services is a career for them, is what will unleash a lot of talent into this sector. We need to be able to get the best people in the world, and some of the best people in the world are in British schools and universities today, and we need to be finding them and training them to serve the financial services sector of tomorrow.
Thank you. And Andrew, finally, just building on that slightly, as Catherine said, obviously levelling up is a core part of what this government is doing and has been doing for the last few years. I think when people think about levelling up too easily, it's a case of, we'll put a few million here and sort out a high street there and fix a few things. But there's a genuine opportunity here, isn't there, and particularly in this sector, which is so widely spread across the country, to really grow the local and regional economies as well as the national one.
Absolutely, and look, these are high quality jobs. You know, they're often low impact jobs. You know, they're not polluting the environment. You know, they're very diverse. You know, they can accommodate all sorts of different modern work practices. And by and large, they're very, very valued jobs. So one of the things I don't really hear is the dearth of potential employees that you hear in other sectors, and partly that's because very smartly it is already incredibly regional diverse. Exactly as Bruce said, 2/3 of the jobs are outside London. As the city minister, there's virtually a colleague whose constituency I can't visit and find, you know, some part of the financial services industry. They're represented in every one of our 4 nations of the economy. One of the things we do have to watch is the chilling effect of regulation. I mean, young people, you know, they're dynamic. You know, they want to go and, you know, make their own futures. If you look at some of the fastest growing areas, you know, they are those very tech-orientated parts of the financial services sector. That might be in a really big firm, you know, the tech part of it, or it may be in a firm that they've founded or banded together. And that's where the culture of regulation just sort of butts up against, because there's relatively other less intensively regulated parts that they're competing for talent with. Look, in terms of levelling up, I mean, this is the sector is just a good example of that. There's other interventions that we're making. As you get productive capital to flow around the economy, and that exercise of capital seeking returns, seeking to make positive returns of capital or yield, itself will hunt out those opportunities. We have often an overheated southeast in many respects. One of the best opportunities for us all is likely to put that barrel hoop around that and get people to come up to Birmingham or Manchester or Glasgow or other parts in search of those opportunities. And the Treasury itself is leading by example. Not only have we opened a northern campus in Darlington, but also the UK Infrastructure Bank, which is a big Treasury intervention with about 20 billion of dry powder to invest in levelling up and net zero, is itself headquartered in Leeds. And by putting institutions like that there, we're again growing the talent pool for the future.
Thank you very much. I appreciate there's a lot of you here, so I'm going to try and get some questions in now. There'll be a microphone that comes to you. If you raise your hand if you've got a question, and then say your name when called, and I'll try and group a couple together if we can. So we'll start with the gentleman on the end there, and if you jump out, and then the gentleman on the row in front of him after that. Thank you.
Hi, James Walton-Jones from the NGO Spotlight on Corruption. Just picking up on points around risk, the Minister mentioned crypto. I was wondering if there are still ambitions to turn the UK into a global crypto hub, especially given recent events around, for example, the collapse of FTX. Thanks.
Thank you very much. Have you passed the microphone to the yeah. Thank you.
Hey, James, Arundel and South Downs, chartered accountant and semi-retired investment banker. I understand from my friends in the city that human resources and compliance have grown exponentially in the last couple of years. Can we investigate the causes of that growth and ensure that they are reversed?
Thank you very much. So who wants to come in first on either the question about the UK becoming a crypto hub or not, as it may be, and generally sort of, I guess, red tape is probably the way to sum up the second question.
I could have a quick on both if you want. Look, on crypto, we've got a very clear ambition. Blockchain technology, distributed ledger technology is a thing. I mean, technology is always neutral. It can be used for good and for bad. The UK has, with its pedigree of fintechs, of startups, the fact we've got a very highly developed city economy and also regulator. The regulators are well resourced here. We have the opportunity to be what I would call, it's a bit colloquial, but the Goldilocks economy for crypto. So there'll be some regimes that perhaps move a tiny bit faster but don't have all of the checks and balances that one needs to create trust in markets. If you really want a market to thrive, you need trust, you need guardrails, you need a basic level of regulation to stop things like market abuse, insider dealing, make sure that people are keeping proper registers. But also, because we are an open and innovative economy, not have a sort of, a downer because of particular events that are in the nature of, creative destruction of new technology, right? So things don't go perfectly out of the box. So that's our objective. We've done some very thoughtful consultations on this because there's important public policy debates, and we are, as you would expect, trying to steer a sensible, pragmatic and proportionate middle course on regulation of what is becoming, whether it's a back-end technology, a mid-office technology, or in some cases at the front line, potentially an investment class asset. We're doing that in a thoughtful way. To my constituent, welcome. Always nice to meet a constituent. Look, we've just got to be mindful. It's the one thing I've learned that surprised me the most in this role, and I've worked in regulated industries before, is just how fraught it is with unintended consequences. Catherine talked about the advice guidance boundary. It's a good example, right? We can see where, some bad Apple IFAs, have been sanctioned and all sorts of things. You start there as we're going to have some regulation, this is a bad thing, but too quickly it moves to a world where nobody can get financial advice, or nobody, unless they've got very, very significant wealth, because of the law of unintended consequences. So I do often say sometimes it's better to be right than to be fast. I want us to move very fast. Where we've got regulations, we need to implement them at speed. But I hope one of the things that I bring, and when we look at the boards of the regulators, I definitely want practitioners around the table who can just be the straining hand that sort of says, well, what about the unintended consequence of this undoubtedly well-meaning regulation? And so whether it's compensation for fraud or increased compliance burdens or another D&I questionnaire being sent round, all of this has a cost. And we're in a global race, and if we just keep putting more and more weight in knapsack UK, we're not doing our firms, we're not doing our industry any favour. But it is, it's always a balance. It's not at the extremities.
And Catherine, just building on that slightly, do you feel like we're getting that balance right? Or do you think that there are areas or times when some of the compliance and the regulation does get in the way?
Well, I think the Minister's right about unintended consequences, and I think that one of the things that can be underestimated is what happens when you put a set of new regulatory requirements into a highly complex institution like an international bank that will then address a new risk. You create a legal risk, you create a regulatory risk, and the institution reacts to that risk. I think the other observation I would make is that risk aversion does not arise solely from pressure from regulators. It arises from pressure from investors, from public debate. The quintessential example currently is ESG, where there is an incredibly active public debate in the UK in which institutions like Barclays are being held to account and publicly discussed constantly, and we're supposed to be accountable to that, and you can expect to see a reaction function. Investors also, clients, we are held to account, as we should be, by a very wide range of parties, and all of those things act on what firms try, with the risks that firms try to manage down. So that's why I referenced a sort of culture of discussion around risk. Certainly here in the UK, and as a UK headquarters firm, it's where we see it. I think that's why it's so important to be able to have that conversation in a different way. A lot of the risk aversion, to be completely frank, and without wanting to, I'm not going to ask the Minister to comment on it, but a lot of the risk aversion in the UK is on the backbenches on both sides in the House of Commons, and that creates the conditions for select committee hearings and public media coverage. I'm not arguing against accountability, I'm just saying it's a broader question than just saying regulators create a problem for firms. There is something that is going on between us here that I think everybody feels is getting us to a place that is not right for the way the sector serves the economy.
Thank you. I'll take another couple of questions as well. So we can go to the gentleman stood by the door there, the first one, and then the gentleman over on this side, the second one.
Thank you. Abhishek Sachdeva from Vedanta Hedging and also a Conservative councillor. So a question perhaps for the Minister. When it comes to sort of, the kind of slightly distant relationship we perhaps have with our pension funds, especially certainly compared to the United States, is there a case for potentially directing or encouraging more of these pension funds to invest in growth capital rather than, for example, private equity investments, which are obviously more opaque and arguably going to be going through an even more challenging period now in this new high interest rate world we live in at the moment?
Thank you very much. And the gentleman at the back there is coming to you.
Yes, David McNeill from the Law Society, obviously one of the thriving sectors in the city. Going back to this issue about collateral damage, do you think that the government is aware enough of some of the linked issues that undermine confidence? So, for example, we've had the debate about the ECHR is seen through the very angry lens of asylum policy, but is actually seen in the international market as a weakening of our commitment to an international rules-based order and the credibility of our jurisdiction. Recently, the implementation of sanctions to stop legal services exports to Russia accidentally criminalised, and I say criminalised, international lawyers based in London advising international clients on US and EU sanctions regimes. Literally, it was a criminal offence. The government very quickly corrected it, and it's all happy place now. There's a lot of accidental damage being done. Do you think the government is aware and astute to that?
Thank you very much. Minister, you want to come in on this first?
Yeah. Look, on the latter, I mean, I hear you, but let's just for once get the Law Society, the legal profession, to sing about the wonderful virtues of English law. The common law is propagated throughout the world. Our lawyers are where massive amounts of dispute resolution happens. We've got financial centres around the world cloning our legal system, and we never hear domestically a lawyer in the press talking about the wonderful virtues of the English legal system, the constitutional separation of powers, the peaceful transition between governments, and the wonderful things that the English legal system has done for the world. And it's just, it's just a constant litany of woe. And I do think, we're talking here about professional services as well as financial services. The legal profession's got to put up and start talking about the positives, because all we ever hear is negatives. I'm sure that's not you, sir, but that's all we ever seem to hear from the press, from the legal profession. I love it. I talk about its virtues in every speech I make. But frankly, it feels pretty lonely because the legal profession just seems to be captured by people who are looking for a compliance compensation culture and criticising this government at every opportunity. In terms of directing pension capital, I don't think it's the role of the state to direct, but there are some very real obstacles that we can tackle that's pushed asset class ownership into things that are excessively liquid. And if you're investing for the longer term, you certainly want some liquidity, but you don't need to have every single instrument in that portfolio with daily liquid pricing. And I've worked closely with the excellent Minister for Pensions in terms of how we can try and change those incentives. It was not always the case. So the reason to be cheerful is that although we see in many pension funds today an excess concentration on things like gilts and fixed income, that wasn't always the case. And it's not always the case in other markets. So we do have that opportunity. In many ways, we've created that. We can create a different version of the future. But there's a really important red line. And I think that red line for us as Conservatives is that we don't think that the Chancellor can spend your money, your pension, more wisely. It's a key difference. When you go to Liverpool next week, you do have a Chancellor there who absolutely thinks that it's their role, just like the last Labour Chancellor, Gordon Brown, whose pension tax raids seriously undermined the incentive to save for a pension. You do have a Chancellor that thinks it's their job to direct where pension capital should be invested. We'll remove the frictions, we'll remove the barriers, we'll try and create the incentive structure to work, but we will fall short of actually directing where your pensions are spent.
Hopefully in Liverpool people are finding a wannabe Chancellor rather than an actual one. Bruce, just quickly from you, perhaps on the confidence point. I mean, how do we ensure that people, both domestically and around the world, have confidence in our financial services?
Well, I think one of the challenges, and having expressed some negative comments about regulators here, one of the challenges is the boundaries between sophisticated investors and unsophisticated investors, and this morphs all the time depending on risk in the economy at any point in time. And so we're right to try to protect individuals from aggressive sales people in financial services product areas, but we should be trying to enable institutional participants to be relatively free to develop, innovate and sell things to each other. And that boundary it morphs all the time, because often wholesale products are then turned into retail products, and there are consequences here. And it comes back to this issue of risk appetite. And for me, we've got to be more tolerant of making mistakes. We've got to be careful not to attack people who do make mistakes through Treasury Select Committees or whatever, because this has the impact of eliminating risk taking from the economy. Interestingly, you mentioned confidence, though, because my day job is in the insurance sector of financial and professional services, and it's a big challenge for the insurance industry because there is a challenge around confidence. You pay a premium, there's a time until you make a claim, and people have a concern about whether their claim will be met when they make it. So trying to increase confidence is, of course, an important way for the industry to provide more value to people who buy insurance and actually, therefore, to sell more insurance. And so, as an example of innovation in that space is the concept of parametric insurance. So this is insurance that pays out when a certain trigger is hit. So if you take something like a flood, one of the challenges with a flood is that you've got to wait for the flood to recede before you can get access to the property. Typically what insurers do is then send in a loss adjuster to value the loss. So there's a delay in that happening. And particularly if there's widespread flooding, say from a hurricane, loss adjusters are hard to find because there aren't enough of them at that point, and they move their prices up to investigate the issue. And the appraisal of a loss in something like a flood can take quite some time. If you have a parametric trigger in your insurances, if the flood reaches a certain level, the models will tell you that you will have suffered X amount of damage, and you can adjust your own risk appetite as to where you set the parametric trigger for how much risk you're prepared to take against the flooding of your property. But what happens is, as soon as that trigger is hit, the check is in the post. And I think things like this can do a lot to improve the confidence between buyers and sellers of financial services products and give people confidence in buying these services.
Thanks very much. I've got time to take possibly 2 more questions. We'll go to the lady down here. George, thank you. And the gentleman directly behind her as well.
Hi, Rose Marley, Chief Exec Cooperatives UK. I'm interested in whether there's an appetite from any of the financial institutions and indeed the Treasury to create financial tools that incentivise social impact and inclusive growth for like cooperatives and social enterprise, which are really struggling to access capital to grow.
Thank you very much. And the gentleman behind you there is called.
Hi, Frank Carson from Aviva. I was just picking up on a point that Andrew said about engagement of pension savers in the US. I just want to make the point that in the UK, with the transfer to defined contributions, means that by the time people retire with a full DC pension, the average wage, the median wage earner will have a pension pot of about £250,000 in today's money. Now, I don't think there's very good awareness of just how much wealth is being created through DC. So what more do you think the government can do to sort of get that message across and use that substantial wealth to really sort of engage people in their pensions?
Thank you very much. So firstly, on incentivising or financial tools to help incentivise investment in social capital, and also then on direct contributions and how we can raise awareness of that as a system. Minister, do you want to go first?
Yeah, look, massive fan of diversity. We should absolutely seek to have an incredibly diverse set of financial institutions. I find it very weird that, there's not many markets in which one size fits all. So we need fantastic, big, global footprint organisations like Catherine's, but we also need place-based community institutions like the fabulous cooperative movement. As a Conservative, that feels very natural to me, that we provide people with a broad range of choice, and some of those choices are rooted in local communities or particular groups that share particular characteristics. And we're dealing with, cooperative movement are dealing with quite an old rule book about their ability to raise capital. We don't want to get to a world where it all becomes homogenous again. So, they're issuing bonds and financing themselves in exactly the same way as any other institution. We want to make sure that the rule book reflects appropriately, the things that they bring to bear, more focus on financial inclusion, more understanding of their local geography. The government's doing a lot. I inherited a lot in the agenda of some horrible 4-letter acronym called CDFIs, which is a US transplant, it turns out. We're much better at 3-letter acronyms in the UK, but Europe has 5 and US has 4, it turns out. So there's a lot that we're doing on that. We're mobilising dormant assets, which is the industry's money. It's not government money, but we're using that industry money to try and fund more access to capital for small businesses, for local communities, and address both the financial inclusion and the financial literacy debate. I mean, think there's a lot of work that needs to be done actually as a society on financial literacy, simply because financial inclusion is sort of catching the ball after they've been dropped. And if we've got a financially literate society, not only can we deal with some of the issues about attitudes to risk, because to have that debate, people need to knowingly accept the risk that they are taking, and that requires better financial literacy in many cases, and that avoids us having to potentially compensate people downstream because of failures that have happened. So I hope there's a lot there. We've done some work on mutuals and cooperatives, and it remains a strong area of focus for us. On the asset wealth that is rapidly building up in defined contribution schemes, and one of the great, I don't think it's particularly partisan, but one of the great, enhancements in this is auto-enrolment. The fact that employers are automatically nudged into making those contributions to DC schemes. We have got an ambitious programme of reform. One of the challenges with DC is if you move around, as so many younger people do in employment, you can end up with multiple schemes and lots of small pots of money, which make it hard to manage and hard to track performance of. So expect to hear more about that agenda going forward. And my point in general about the lack of agency people feel is in so many other of our domains, and I accept this is a little trite and a little bit the extreme, but in so many other domains these days, our interaction is on an app. It's simple, it's real time, and we have some sort of locus around decisions that we can make. And by and large, I suspect this is not true of Aviva and many others, but by and large, most people's experience of their pension is an annual letter, in quite a regulated and quite an analogue fashion that doesn't really feel they're particularly involved in any of those decisions. To the point about investing in the UK, people have a very low level of awareness about how their pensions are invested. The classic is I'll tick the box that says I'll invest in the default fund. Defaults are very good things in life, but what they don't do is particularly have people make a positive decision. And, the kids have got to go to school and, people have busy lives. But it does mean that very few people know exactly what their pension assets are invested in. They don't know what territories. Many people are patriotic and, given the chance, might choose to invest in the wonderful, diverse UK investments that are available. So trying to do things like use digitalisation as a way of closing that gap of knowledge is something that is absolutely under consideration. Thank you for the good work that Aviva do.
Thank you, Minister. Unfortunately, that is all we have time for today. And I know that the Minister's got a very packed conference schedule, so I won't delay him any further. But thank you to the Minister, Andrew Griffiths, for joining us, to Bruce Carnegie-Brown, Catherine Braddock and Catherine Griffiths. To all of you for joining us here in the room, do stay with Conservative Homes for the rest of today. We've got plenty of events here in the marquee and in our second venue. And finally, thank you to the City UK again for partnering with us again this year. Thank you very much.